Hello everybody, this is Matador from freetradingvideos.com. It's January 15th, 2009. It's about noon, and this is your noonday report. So, pretty interesting morning. A lot of not so positive news in the form of stocks basically declining as bank worries persist. Just reading some headlines here. Even the House Democrats are proposing an $825 billion stimulus bill again. Looking to try to stimulate the economy in the fear that the banking stuff isn't over yet. All right, crude oil dropped below $35. The demand for petroleum actually is in the lowest it's been in 5 years. J.P. Morgan posted a profit, but it was a disappointing one. All sorts of stuff. Technically, you can look at the S&P 500 here. It's a pretty good sized sell-off from that last little run-up. And I mentioned yesterday these areas of support. If we were going to fail this, that the next logical place would be down here at 82, and we are now hitting 82 to the penny. Not at all rare to see a stock bounce at this kind of support, and there's good psychological reasons for that. And just in the last 30 minutes, we have a higher swing low being formed in here. Pretty good. Here's a swing low, a lower swing low. A little bit of a higher swing low. This was the beginning of a cup and handle right through here. Worked its way higher, and then it pierced that back to this double bottom. So in a larger sense, for a day, this is actually a higher swing low. We'll have to see whether it can clear out past this. That's going to be a big area because it was support, right? Again and again, breaks, becomes resistance once, twice, 3 times. If it makes it back up through here and the declining 50 MA, which isn't a big deal on a 3-minute chart, but it does exist, then that would be a positive thing for the markets. But it's hard to smack in the face of what's going on with the trend. It looks like a little baby compared to what happened yesterday with all that volume, but still some pretty good fear in here. At one point, twice as much volume was flowing into stocks on the decline as they were on the incline. So here is a pretty good support resistance area. So I would need to see the trend drop below 1.0 before I got very interested in any kind of breakout trade intraday. The VIX is also a bit of a problem. Oh boy, here's that 50 line. Breaks back up above it, support, and it's just been non-stop with a high base. That same high base is corollary to this low base we have going on in S&P. If it drops here, our predefined 82 area, then our next stop, well, it could be anywhere in here, of course, but $80 would be a big one to watch out for, and that's another 2 points down, at least on the S&P 500 ETF. So watch out for this break to this area, and also then a break to the upside. Some good resistance is very close in here, the swing high, and of course this big area in here. Support, 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 breaks, becomes resistance in this area. So those are your areas on the way up and on the way down. Pretty good. I would look for relative strength and weakness in here as always. Look to trade those long and short and just use this as the confirming indicator it can be. So I hope this helps, and trade safe out there, as safe as possible while still putting money at risk if you're ready for that. If not, paper trade. Paper trading is excellent. If anybody tells you it's not, I don't think they know what they're talking about, and we could have a discussion about that, but it's good stuff. So let me know, and I will talk to you guys soon. Have a great rest of the day, and I'll talk to you tonight.